What does waiving an appraisal actually mean when you're putting in an offer and the agent asks you to waive appraisal? So let me explain that. When you go to get a mortgage, all the banks do an appraisal. They come to the home to make sure that what you're buying is worth what you're paying. And they will only mortgage the amount that the appraisal comes in at. And if the appraisal comes in lower, then you have to make up that difference between what they say the home is worth and what you actually paid. So let me give you an example. You buy a home, multiple offers. So you make an offer for $750 and the home is only worth, or I shouldn't say that, and the home is listed for $650. You make an offer for $750, 100 over, because that's what you need to do to get this house, or that's what you were told that you need to do to get this house. The mortgage appraiser has to come in and appraise it at $750. If it appraises at, let's say, $650, well, then that's $100,000 difference. Or if the home is, the appraisal comes in at $700, then that's only $50,000. However, if there's not that much of a difference, and usually there really isn't, I haven't seen too many homes not appraise or at least be close, the lender can reconfigure the loan so that you're putting less down and take that money to put towards the difference of what the home is, the appraiser says the home is worth. So that's what waiving appraisal means. It doesn't mean that there won't be an appraisal. It means there will be an appraisal, but you don't care about it because you're going to put the difference so that you could buy this home. Because it does not matter what a home, if you're overpaying for it. No, a home is worth what a buyer is willing to pay. And if you're willing to pay that, that's the market. And what I always do with our clients, what we do is we try to figure out what statistically is the number that, how much percentage over are the offers going in that particular town, because every town is different. And every town, it might be 2% to 5%, 10%, sometimes 20%. So if I say that, okay, Hillsdale, we just recently realized that homes were going about 4% over. So I might give the advice to my buyer and say, I think we need to go 6% over to make sure that we get our offer accepted. Now, you may or may not want to do that, which is another important point, what I tell our buyers as well. If your top number in buying a home is, let's say, $800,000, you should be looking at homes between $7 and $780, because chances are, in a great market or in a great area like Bergen County, for example, the prices are going over. And I don't see prices coming down anytime soon. But I will say this too. A good realtor will tell you if they think the house is really worth that or not. And here's another caveat to all of this. If you're going to be in the home for another 10, 20 years, well, does it really matter? Look at what your mortgage payment is. What are you paying per month? Because that's what you have to, realize. You're getting tax write-offs, and you need to have a home, and you're not going to rent for $5,000 a month, because then you have nothing at the end of the day. But if you hold on to real estate, you're going to get equal or more value, or you'll pay into the principal. So even if it sells for less when you sell it, you still have money in the game, and it's like a savings. So I always say, what's the alternative? Even if the interest rates are 7%, should you buy? Real estate is always a great investment. It's something tangible. It's something that people always need. And, especially if you update it, it'll be worth that much more. And that's in a whole other topic. But that's my 2 cents about appraisals and whether or not you should buy a home in this market.